social services, things that are deemed to be vital for the welfare of the society, it's the responsibility of the government to provide such services. These are not limited to matters of education, matters of health. And I want to say that education is key, health is key, because these are the pillars of any growth of any economy. Development comes as a result of what the measures that the government intends to put in place. These are supposed to spur growth to the economy. That there are sectors which contribute to the increase of economic growth, and these are what the government focuses on. Things to do with improving of agricultural systems, things to do with transport, things to do with communications, things to do with industrial development. Perhaps the reason why you see the government focusing on to those industrial parks in every county, the reason why you see the government struggling to make roads, both the national and the county government, this is what we are talking about. That we need to improve agriculture so that we ensure food security, and these are the issues that support government finance. Now, we did say that public finance, therefore, as we perform these functions, there's need for us to generate funds and spend them accordingly. So we redefined and looked at public finance as to involve public revenue and public expenditure. Revenue for incomes, expenditures for outflows, and that's what we spend on. So we did identify internal sources of government revenue, and we did see how those internal sources actually serve the country. We looked at tax, and we look at taxation as a topic. We looked at fees, prices, special assessment, fines, state property, and also internal borrowing as a source of government revenue, where the government can borrow. And we have seen those internal borrowings earlier on in this country. I did give examples last time. Now, today, I want us to look at public expenditure. We have now received the funds. How do we go ahead? How does the government go ahead to spend the same? So public expenditure, this involves spending of the public revenue that we have generated internally and both externally. Externally, this comes in the form of foreign aid and grants. Foreign loans, those development loans are what constitute external sources of funds. So for the government to spend those funds that have been generated, those funds that have been received, there are basically 5 guiding principles that the government uses in terms of observing the expenditures of the government. These principles guide the allocation of funds and the spending thereof. Number 1 is the principle of economy. Under this, we know that resources are normally scarce, and therefore we should guard against any wastage. We should not allow wastage of funds, meaning that we must spend these funds up to and including what is necessary. That we must utilize the funds that we have received, that we have generated, with the minimum wastage. We must utilize these funds prudently. We must spend these funds on the projects that have been intended. As we look at this, I want us to evaluate our own government and other governments that have been in place in this country. To what extent have they met these principles of public expenditure? So if we are supposed to be prudent to utilize what we have generated to have minimum wastage, then there is need for us to say that, yes, we are observing the principle. The next principle is sanction. Sanction is nothing other than authority. That we should not spend public funds without authority. Now, the basic question would be, who sanctions or who gives authority to spend public funds? In Kenya, authority is given by Parliament of Kenya. That the government cannot spend funds unless the Parliament has appropriated and approved. That's why the proposals as contained in the budget estimates through the budget making process are done or read to the Parliament discusses, the Parliament appropriates, and the Parliament approves. So the authority to spend public funds lies solely in the arm of the legislature, and that is the Parliament. So they must follow up and see that the purpose for which they allocated the funds is actually what they have been using and what was actually authorized or otherwise sanctioned. How does the government spend funds? It's guided by the principle of maximum social benefit. What does this principle stand for? Maximum social benefit implies that the government must spend funds in those items or a combination of items that together they maximize the social benefit, meaning they must benefit most citizens. Look at the key sectors of the economy: education, health, transport, communication. These are sectors of the economy that we talked about that the government has to perform as part of the development function. When the government puts up a hospital, constructs a road, the beneficiaries are enormous. They cut across. So this is what guides how many people are going to benefit from this project or a combination of these items that the government spends funds on. So it is important that with the principle of maximum social benefit, that the government spends funds or incurs those expenditures which are deemed to be beneficial to the society. They must benefit majority of the members of the society. Number 4 is the principle of surplus. We know that surplus comes as a result of comparing two things. One, the expenditures, and two, the revenues. We talk of a surplus or a profit or a saving if we spend less than what we have received. So according to this principle of surplus, we say that the government must always strive to spend less than what it has actually generated in terms of revenue. Why do we spend less? We spend less because we don't want to incur deficits. A deficit is when we spend more than what you have. Now, how do you spend less? And why should you spend less? That you should spend less than what you have so that whatever is left, you save it. Even as a person, whatever is left, you save it. Now, what will you do with that savings? We have what we refer to as unprecedented expenditures, unprecedented times, the times of need. That's when you use those little savings to run the government. Look at the issues of drought. Look at issues of El Nino, for example. No government anticipates to have drought, hunger. No government budgets for perhaps instability. No government budgets for floods. But these are things that perennially occur. So it is up to the government to make savings. So during such times, those are what we are referring to as unprecedented times. Then we can spend that little that we shall have saved on such emergencies. These are none other than emergency things. And we have seen this happen in the Republic of Kenya. So even you as a person, you need also to save. Don't spend all that which you have. Spend up to what is necessary. Then make some little savings. Those little savings will save you during the times of need. When something important, something urgent comes up, you have no funds, you did not a budget for it, then you will be able to expend. Then the last first principle is the principle of sound financial administration. This deals with record keeping and accounting for the sources. How much did you receive? How much did you allocate to spend? How much have you spent? That this therefore suggests that we must maintain those financial records, financial accounts accurately and systematically. I don't know what this happens, if this happens in the country. But those of you in BCom or BBM or whatever, this is something for you to think about. Because for every expenditure, there are accounts that are maintained. These accounts have to be accurately kept. These accounts have to be systematically maintained. Why this? So that in case of any discrepancies, in case of any omissions and commissions, this should be handled, should be brought out and be handled. Perhaps this is what should be done to guard against corruption and spillages in terms of financial allocations of the government. That if we maintained our accounts accurately and systematically, and this have to be audited, then we should be able to investigate whatever the shortfalls that may arise in that order. So how is the Kenya government performing on this? That's something for you. We have an audit unit. We have a control in terms of those who are accountants, who keep those records through the ECPAC and name them. So these are the issues. So when the auditor comes around, he checks how accurate have we maintained the records, how systematic is it, and therefore they expound and bring out discrepancies. And these are the main 5 functions of public expenditure. Now, what we need to understand is we have done the income. We have done the expenditures. We need now to see how do we marry these expenditures and the revenues so that we meet these guiding principles. We do this by various ways, as we are going to see through the budget. But before we look at that, let us look at external source of revenue that comes through what we call the balance of payment. What is it that we call a balance of payment? The balance of payment is just a summary of international transactions. How much has the government received from other countries and how much has it paid to other countries within a period of 1 year? So the incomes and the expenditures at the international level, this is what constitutes the balance of payment. How do we get the incomes? Incomes are that what we receive by way of exporting our goods and services. Then expenditures is the spending. So how do we look at it internationally? By way of what we are bringing, importing into the country. So the balance of payment is basically looking at how much are we exporting and how much are we importing and what is the difference between them. So if we zero into that international transactions, then the balance of payment has to have 2 divisions. One, what we refer to as the current account, what just tells us the exports and imports of goods and services. That's what we are talking of, visible and invisible items. Then the capital account, which is dealing with the receipts and payments of the international, what I talked about, the external resource, the foreign loans, the foreign aid, the grants in aid. That is what we are talking about. So how much did we receive in terms of what we actually exported and what we imported, and how much did we receive from the partners in terms of the aid, in terms of the development loans, and the like. So that is what the balance of payment is all about. Now, how do we compare? When the balance of payment, what you receive exceeds what you are paying to other countries. When the receipts exceed the payments to other countries, then of course we shall have the surplus. That surplus is what is going to form the revenue to the government as an external source. When what we receive is less what we are paying to other countries, then we shall have a state of deficit. We must look for more money to pay. How do you look for more money? By increasing taxes. Because the tax is the most common and the best way of generating revenue for the government. Increasing the fees, increasing the prices. That's what we are looking at. But when the two balance off, then we talk of a balanced balance of payment. So those three states are key. We compare the receipts and the payments. So the balance of payment can be in surplus to bring money to the government, can be in deficit, we must look for money and pay, or can be balanced or at equilibrium for us to look at that. Now, how does this therefore affect the local market? This affects the local market through what we refer to as the GDP, gross domestic product, the GDP. How does the GDP, many times when they're talking about public finance, the GDP, the balance of payment, and the GNP must come up. So how does the GDP work? GDP by definition is the market value of all the finished goods and services in a country within a year. So what is the value? Market value. Market value means we must measure all that which we produce in monetary terms. And we must make value for our annual output because it's for a period of 1 year. And number two that we should note is that final goods are the only ones included. Those that we are producing locally and consuming locally. So if it goes outside the borders, then that becomes a balance of payment, an international transaction. But domestic, why I say domestic? We are producing and consuming locally. You have some piece of land, you plant sukuma wiki. That sukuma wiki you are using for your household and you're selling to your neighbors. That is a domestic affair. And that is what generates the gross domestic product in simple layman's language. So if we are looking at what we produce and consume within our borders or locally for that matter, what is its monetary value, then that is what gives us the gross domestic product. And this, therefore, we can easily see what is it that forms or constitutes the gross domestic product. One, we have those of agricultural production. We are producing and consuming locally. We have the mineral production. Look at the soda ash and other minerals, cement that we are doing, the industrial product. We are manufacturing sugar and consuming it locally. These are the key things. So as the government plans to spend the development function, so it's focusing on this because they want to increase production, agricultural production, mineral production, industrial production as part of the development which we saw as a function of the government. So as they spend money on this, that's public expenditure. And now in turn, we wish this to grow so that it also improves and generates income for us by way of the gross domestic product. Now, how about the international? Because this is what we are producing and consuming locally. What we produce and consume internationally is what generates the gross national product. When we talk of national product, we are looking at the total market value of all goods and services that generate income to our country. This income is deemed to be across borders, not internal. What we are trading across with maybe Uganda, Somalia, or Tanzania, or whatever. So the goods and services that we sell to other countries and those we are buying from other countries, this is what we include in the GNP. So generally, we are looking at the income from abroad. To this extent, therefore, you need to realize that gross national product is bigger and should generate more than the gross national product because we are producing locally and across the borders. So the national product, we look at what are we exporting, less what are we importing. And from the balance of payment, we saw this, that if exports exceed imports, then we shall have a surplus. That surplus, if added to the GDP, what we produce and consume locally, then that gives us the gross national product. If the exports are more than the imports, then GNP will be more than the GDP. When the exports are less the imports, then that net factor income will be negative. So if the net factor income from abroad is negative, it means we have to pay. How do we pay for those international debts? We pay from the GDP, what we have produced and consumed locally. And under such circumstance, then you will find that the GNP will be lower than the GDP. This is what you need to understand. Under what circumstances is GDP more than GNP? When the net factor income is a deficit, because we have to pay from the local market. So if we pay from the local market, then GNP will be lower. But ordinarily, for a better performing country, a better performing economy, GNP must and should always be more than the GDP because of that net factor income. That is what this is all about. So as we look at the government income, the government expenditures, we are looking at it in the local market and at the international market. This is what constitutes public finance. But as we look at the incomes and expenditures, the incomes and expenditures are supposed and truly are, therefore, supposed to follow a financial quantitative statement that shows us what are the incomes and what are the planned expenditures. This is what we talked about in the course outline as budgeting. So what is budgeting? Budgeting is a process. It's not a one-off activity, it's a process where we want to draw out a detailed quantitative and financial statement about what we expect to receive as income and what we plan. We plan to spend and we expect to receive, because at times we don't receive what we have expected. At times we don't execute what we have planned because of certain reasons. So to this end, therefore, budgeting is the tool that helps us to plan about what we expect to receive and how we intend to spend. As we look at this, ladies and gentlemen, let us focus more on our personal level, then understand the national level. That as we look at this, we must see why must you budget, whether you are an individual, whether you are an institution, whether you are a government. Why must we budget? Why must we always do a budget? And if you have not been doing a budget, then understand why you need to be doing a budget. A budget serves the following. Because we are talking of a planned expenditures and expected incomes. So it helps you identify those sources of income, their various amounts. That's one thing. You will have to identify What are your sources? As a student, is it help? Is it scholarship? Is it a Harambe? Or what is it? So we identify the sources. Then how do you plan to pay? So what do you want to spend on? Pay fees, pay accommodation, food, then matters of academics. Then at the end of it, it has to evaluate performance. How are we performing as a country, as an institution, as an individual, as an organization? Budgeting, therefore, will help you make decisions. You'll say, instead of buying this, let me do this. Instead of this, let me do this. That is decision making on the basis of how much you have and what you plan to spend. It therefore coordinates the activities of an organization and even coordinates your activities. Tomorrow is Valentine's. Many are planning great things. How will you coordinate them? We are coming to that as we look at personal budgets. As we have seen, a surplus budget therefore promotes savings and investment habits. What you have saved, that's the principle of surplus. What you have saved, you can use during unprecedented times. You can save that in where you can retrieve that money easily. Some of you are saving through Mshwari. Some of you are saving through money markets, where you can access this money within 24 hours. And above all, any budget making process has some aims and objectives. So through budgeting, we are set to achieve what the aims and objectives are that we have stipulated within the given time period. So that is what generally budgeting is and why we must budget. As we look at this, then what are the components of the budget? The components of the budget come from the general broad perspective of public finance, the revenues and expenditures. So a budget has two components, the revenue component and the expenditure or the expenses component. All that which you expect to receive is considered as an income or a revenue component. And all that which you plan to spend or the expenses you want to incur constitute the expenditure or the expenses component. The outflows, revenues are the inflows. We have already looked at this. That as we compare a budget, and kindly note the Kenyan budget, we are looking at the revenues versus expenditures. When revenues exceed expenditures, then we talk of a surplus that we have looked at. When revenues are less the expenditures, then we are looking at a deficit budget. And when the two are balanced or at equilibrium, then the revenues are equal to expenditures. You are spending what you expected and what you planned without any variations. So those are the two major components, the revenue and the expenditure. So as we make the budget, we must outline what are our expected incomes, that gives us the revenue component, and what are our planned expenditures, that gives us the expense component. Now, there are basically three types of budgets. One, personal budgets. Two, we have the government budgets. And three, we have business budgets. Let us look at personal budgets because this is what this course is supposed to help you make a budget. That as we have said, the two major components, the sources of income and the planned expenses. You must look at personal budgets as that which you are preparing as an individual. You specify your goal, how you are going to achieve. That is the purpose of budgeting. What is your aim? What is your goal? What do you want to achieve? As you do this, what will be your sources of income? As an individual, what are your sources? Maybe you get through salaries or wages. Some of you are doing work-study programs. You are getting from interest on savings, dividends from investments. You are getting as gifts. You are getting as donations. So these are some of the sources of your income. Then what are the expenses? The outflows of funds. What do you intend to spend on? we know we don't spend haphazardly, but there is always a procedure that we must meet first the basic needs: food, shelter, clothing. Then secondary needs, that which we may do without, but not necessarily do without. Then we have those tertiary needs, what we can do without. But now, how do we prepare these personal budgets? That we must have a guideline. That as we think of the personal budget, let us set our aims and objectives to fall within our income bracket. You cannot have an aim of buying a Mercedes-Benz when you yourself, you have no source of income to match that. You may not want a phone that is maybe of 50,000 when you don't have an income what to pay for that phone. Maybe this explains why you go for the touch phone, yes, then you pay polepole through Mkopa, because you know how you'll be paying. Every week, is it 100 or 80? That's where you belong. That's how your income bracket is. It determines. Now, you need always to note that the affected individual should be involved. Tell your parents, tell your guardian, tell your sponsors, tell your friends that this is what you need. You need a phone. At the university, lectures are online. At the university, you need to search and do whatever. Let them understand and be part and parcel. Then prioritize the basic needs, as I've said, over the secondary needs and others. Things of leisure and entertainment should come last. I'm told that on 21st you have precious whatever. So I know some of you are planning to spend. That is leisure, that's entertainment. But I know also that tomorrow is Valentine's and you have planned great things. I hope I'll be within to see and monitor from close range what you will be doing in the evening. Maybe it will be different from the other groups. But also what needs to be considered is that there's need for constant review of the budget. You revise. Why do we need to revise? Because some goals, aims, and objectives may not be attainable in the near future. Some may have changes, like the changes in the price. You have anticipated that you will get this phone at 5,000. Then with the Rotonomics, the prices increase to 7,000. So you need also to review your budget and have that. So how do we go about looking at this? I want us to look at a hypothetical example. And please understand this example, how I'm going to explain it. It may bear fruits in terms of your organization, of personal budget. I want us to prepare a 3-month budget. A 3-month budget. This is for a semester, January to March. That you expect the two components, the income and the expenditures. What are your sources of income? We have classified them into two. We have salary, which is constant every month. Say maybe or work study or what have you. So it'll be paid 8,000 every month. Then I've classified those as other sources. I know in January when you come from home, maybe you are given some gifts. Your boyfriend or man friend gave you something. Your church gave you something. Your parents gave you something, totaling to 2,000. In February, people are very busy at home, plowing and doing whatever. So they not send you anything. That's what you anticipate. Then in March, of course, they know that you didn't get something in February. They will send you something for upkeep. This gives you the totals for January, 10,000, February, 8,000, and March, you anticipate to get 9,200. Now, what is it that you plan to expend? These are expected incomes. What is it that you plan to spend? Basic needs first: food, shelter, clothing, rent. Then, of course, you have to walk around, transport, as a student, then you want to do some savings to meet a certain objective. You also want to buy a phone. You want to meet those unprecedented things that we have talked about. So you are making a provision in your budget that you must save. So food, when you come from home, maybe you carried some bananas or what have you. So you intend that in January you will spend 3,000. In February, because there is a serious function about tomorrow, Valentine's. So you are budgeting that you will add there. You will take your girlfriend or man friend out for some soda and snacks, chips. Then in March, there will be a lot of academic activity. So you may want to spend a little bit more on it because you'll be staying late in the night. In terms of clothing, I know you have some Christmas holiday dresses that you bought. So for the month of January, we don't want to see you in the same clothes that we saw you last semester. So you have budgeted to buy a few mutumbas at 1,600. For February, you are not budgeting for yourself. Okay? Because you know you have to make the other half happy. Then in March, you don't want to go home with the same clothes that they saw you in. They should see you as from the university. So you want to buy some for 900 shillings. In terms of shoes, we don't want to see you in the same shoes we saw you in last semester. So you will buy one pair at 500 ya mutumba. Then in February, you have no gift to give to your Valentines. So you are making a provision that you will buy a gift of shoes. Because if you ask the Bukusus who are here, they will tell you. In fact, those circumcision songs normally tell us, whatever it is, that you will spend 1,800 to please her with a gift. And of course, in March, hapo kitakuwa kimeumana. Hii kiatu ulinunua January ndiyo itakupeleka nyumbani. Itakuwa bado nyumbani hawajaiona. Rent is standard, you pay 1,200. Then transport, of course, you spend 800 per month. Then you want to save for a phone. So you plan to spend 1,800 for January, 2,000 for February, 1,500 for March. Now, what will be your total planned expenditures? For January is 8,900, February 9,200, and March is 7,600. Why is February more? Because you have taken care of that gift. So if we look at what is our net surplus, is it a surplus or a deficit? We are looking at the total income minus total expenditures. So 10,000 minus 8,900, it gives you 1,100. Then what, from December, you had a balance of 200 shillings. So what do you carry forward to the next month? It's 1,100 plus 2,200 to give you 1,300. So that is what you anticipate to be your carry forward at the month of January. You will have 1,300. Now coming to February, you have 8,000 shillings as expected income. You plan to spend 9,200. So you'll have a deficit of 1,200. What is in the bracket shows a deficit. But from the previous month, you had 1,300, which can now mitigate that deficit. So at the end of February, you see the balance you carry forward will be 100 shillings. So you are carrying 100 shillings to the month of March. For the month of March, you anticipate to get a total of 9,200. You plan to spend 7,600. So you will have a surplus of a budget surplus of 1,600. Plus now the 100 from the previous month of February, that gives you a total of 1,700. So you are anticipating that by end of March, by the end of your semester, you will be having a balance with you of 1,700. How much shall you have saved? 1,800 plus 2,000 plus 1,500. That is a saving for a given project that you intend to have. If it means going for a holiday or buying a new phone or doing whatever, that is what it means. So this is a hypothetical case of a personal budget. So you can borrow from this, you can learn from this. You can put there as many sources of income as possible. You can put there as many as possible the planned expenditures. But remember the guidelines. We have already said the guidelines. The aims and objectives must fall within your income bracket. Those that affect you, the individuals around you, must be part. Give priority to basic needs, then secondary. So review your budget always. Those are the key guiding principles. And you look at this, it's reflective. When you come from home, then there's so much that is going to happen, what you intend to do, and that is what we are talking about. Let me pause a little bit so that we see the questions, if available. Any questions? We run through. Will you be my Valentine? Sasa ona vitu mnaulizana. Did you budget for Valentine? Next ni balance sheet. Wewe uko wapi? Balance sheet hapa hakuna. Send me full notes after this. Full notes, you will get them. They will be worked on by, but they are in the LMS system. Log into my credentials if you're in my class where you registered. You will get, they are there. Balance brought down and balance brought forward. We don't have that. Now, the savings from the previous month, we are taking at the balance. How much did you have last month at the end of it? We are assuming that you had 200 shillings from the month of December. So if we added on the anticipated balance of 1,100, then you get 1,300 as the balance for January, which you now carry forward to the month of February. So from previous month is what you had. Now what you are carrying forward is what you had with what you have at present. So when you look at February, the month of February, balance from the previous month is the balance from January. That's the 1,300. That's why it is there. If you check March, is the balance from February. What do you carry forward from February? That's 100 shillings. That's how it comes up. How do you calculate GDP? That's outside the course, but if you want to know, you can come. I teach you how to calculate. These are basic course. We don't need to go into those details. How can we get, why are you asking for notes and I'm teaching? How do I stop gambling? That's personal, you can see me. Can repeat the example, your personal budget, it is there. Why do you want notes and I'm teaching? You must be attentive. The lesson is enjoyable. Thank you for the compliment. Like wanaweza tuletea kwa exam tutengeneze personal budget. Yeah, I can set anything. I have no problem. I can give you a scenario and ask you, where do this can be asked to draw a personal budget? What are some of the, yes, Polycarp? Somebody has a hand up? Polycarp, unmute and ask. Sirishiti? Felix? Oh, you don't want to talk, so let us proceed. So we look at business budget. Now, with the business budget, we want to see what is done in terms of organizations or business investments. And we know that the main goal for them is to make profits or provide service. So for this, we must consider the following and make it a priority that the budget is mainly for coordination among departments. And secondly, is that the budget must follow laid down procedures. And what is the procedure? Each department prepares a draft. Then the draft is synchronized to make a budget for the institution. And that budget for institution is what is approved. And then it's periodically evaluated to monitor the actual performance against what is the plan. And perhaps we make provisions for any deviations. So because we are looking at the budget for the business, in business, we talk about the inflow and outflow of funds, which consequentially therefore means that we can have this as a cash flow. Because cash flow budget, this is what gives us what comes in and what goes out. So business budgets are also referred to as the cash flow budgets. It is in this regard that if you look at the preparation, if you look at whatever, then it follows what we did see under the personal budget. So for this, therefore, you can look at this as your exercise. And if you have a problem, then you can come, we look at it. That this is XY Book Point Investment Limited, and you are now to prepare a cash flow budget, just the way we prepared the personal budget, this one. So the period is there. Identify what is their source, what is their total income, what are their various expenditure patterns. So if you look at this is Book Point Investment Limited. So we have the month of January, February, March. Sales is their income. That's what it means. They are in a business. So anything they sell, they receive. So sales are their income. They pay salaries, they pay wages, they pay rent, they pay for raw materials. So salaries, wages, rent, and raw materials, those are the expenses. So look at it and see how do we prepare that and see if it will be in surplus or if it will be in deficit. So that is as brief as what the business budget is. Let's look at national budgets in detail, because this is what affects us. National budgets, ladies and gentlemen, these are budgets that show what was the financial accounts of the previous year, what are the estimates, the revised estimates for the current year, and then what we propose for the coming year. So if we are in 2024, 2025, this is our current year. Now, as we want to prepare 2025, 2026, what we do is that we look at what did we do last year, 2024, 2025, 2023, 2024. What is it that we have done in the current year, 2024, 2025? And on the basis of the two budgets, then we can now propose what we want to do in the next year. So as we do this, we base on assumptions that the taxes will remain. So with the Rootonomics, the taxes will remain in the next financial year. What is there currently? That the changes that will be made, therefore, will only be a description of the fiscal policies of the government. What does the government want to achieve? What projects does the government want to do? And therefore, what financial plans correspond to those plans, to those projects, to those activities of the government? So the budget of the government is not cast in stones. It is cast in terms of what activities, what policies, what projects, what developments the government intends to put in place and their corresponding financial plans. So don't say that Ruto akikuja Bungoma anatakana tuachie sijui pesa ya barabara. Was that in the budget? If it wasn't, he will say to please you. But then he goes, unless it is in the budget. And that's what your MPs will not tell you. Unless they have passed it in the budget, there is nothing that will be done. So it must come through the budget. If it was not budgeted, it must have to come through the revised estimates of the budget. If it wasn't, then that project will not take off. Now, how do we classify national budgets or otherwise public budgets? National budgets are classified on the basis of two grounds. That they're either classified on the basis of their functions or they are classified on the basis of their economic activities. Now, when you look at the functional classification, functional deals with the functions, and we saw the functions of the government. There were 4. So these functions are as derived from the UNESCO Convention. So under the UNESCO, they have also classified under 4. So they have the general services, which includes administrative function, as we looked at. We have the social services, matters of education, health, and what have you. Then economic functions, that which will spur economic growth. This was the development function. So we have seen from the 4, the UNESCO classified them into 4, but has collapsed the 4 into the 3. Then it created a 4th one they are calling an allocatable category. So anything that we cannot classify as either development or economic service, social service, or the general service. General service is that of protective and administrative function. They call it general service under the UNESCO, United Nations. So this is why we must budget. So national budgets are also classified on the basis of the function. And these are the 4 functions that we had looked at and we are looking at under the UNESCO Convention. This is what it is. But now under economic classification, we are classifying it on the basis on the mode of its financing. What do we mean by mode of its financing? Is it a government transaction in terms regarding its commodities or what it is? Now, for us to understand national budgets better, most governments have adopted an existing model, an existing mode for financing. We call this program and performance-based budgeting system. Program and performance-based budgeting system. How does this work? Let us delve into this so that we see what it's all about. Program and performance-based budgeting system is based on the activities, functions, and projects of the government. So it's taking care of the economic and the functional classification together. And its purpose is basically to improve formulation and execution of the expenditure policy of the government. That's the aim. Because the government must formulate policies, the government must execute policies. So those policies and its execution are what we refer to as program and performance-based budgeting system. So you program a project, an activity, then you allocate funds and you monitor the performance. Simple layman's language. Why to PPBS? Why PPBS? What is its purposes? We know scarces are resources. Resources are scarce. And therefore, PPBS arises out of this need for scarcity of resources, despite the numerous needs of the society. So they want to see which needs are of priority and then allocate the scarce resources to those. PPBS goes beyond just a certain project, but it wants to emphasize on efficiency and steps forward. Efficiency and steps forward. Mostly in Kenya, this is political. But we'll look at it and see to it what it is all about. Excuse me. I'm sneezing because of the cold in here in Kitale. So with PPBS, they provide feedback, immediate feedback to the executive and the legislature because we talked of the principle of sanction. The executive is to execute. The legislature is for decision tendency in decision making. Although Hello, hello. Welcome back.
You okay now, Doc?
Hello, Magdi.
Yes.
Unanipata?
Ninakupata.
Oh, thank you.
Welcome.
Yeah, I'm unmuted. So class, we were looking at program and performance-based budgeting systems, and we saw that these arises out of the activities, the functions, and projects of the government with an aim of improving formulation and executions of the expenditure policy. The purpose of PPBS, it arises from scarcity of resources relative to the needs of the society. It goes beyond just a certain project and emphasizes the need for efficiency. Then there is an issue of providing feedback, and then to avoid haphazard tendencies in decision making. Arising from this, then PPBS has three steps that are followed when making the budget. So with these three, we must have clear goals and objectives for the policies. So what is it that the government wants to do? What activities, what functions, what projects? They must be very clear and how they are going to do it. Then how do we measure efficiency? How do we measure this for the government? That we can deploy analytical techniques, and more so by performing the cost-benefit analysis. What will be the cost of this project? What's the cost of this activity? What's the cost of this function? And what will be the benefit to the society? Remember, we talked about the maximum social benefit principle for public expenditure. Now, we need also to project how will the current program and policies be related to the future benefits or problems. As we are doing this project, what is its gain? What is its future benefit? Or what challenges exist in the future? So with this, ladies and gentlemen, we wish to look at it and then say that, yes, this is it, and this is what we can. So we can look at it further and now see what are the problems, because we are looking at the functions, we are looking at the purpose, we are justifying, then we are looking at the stages. But what are the problems? What are the challenges that we have that are associated with this? As much as we expect this to be the best model, there are about 5 challenges associated with this problem. One is that of multiplicity. One objective may be a target for more than one program and project. If we are putting up a tarmac road, or we are doing the Bungoma main street, that does not only give us a development function, but it's also going to improve the communication network, the mobility. If we put up a hospital, we are also going to create employment opportunities. If we put up an institution like Kibabi University, it's going to open up and attract, apart from employment, apart from opportunities for training, it's going to also create employment opportunities. That's what this is all about, but it's an advantage in itself. How do we quantify? Some things are difficult to quantitatively measure the results. If I'm employed, how do you measure my service to you? Is it by you all passing? Is it by you all failing? How do we measure? So it's difficult for us to measure some quantitative results. How do we measure that this road has been done and is good? How do we measure that this industrial park has had an effect? These are things. The issues of flexibility. Political systems come with so many, a myriad of things. How flexible are they to programs? How flexible is the current government to do the projects of the previous government? How about the coming government? Will it continue with this? So the problem of the political system is key, because we cannot quantify, because we are Nasema, we had spent 10 million, the project was 3/4, when the project was actually not even half done. Then issues of analytical skills. And analytical skills, they depend on individual person. How do we prepare? How do we execute? And skills are normally limited. Look at our engineers. Look at our accountants. What are they doing? Our accountants know. They know how they are supposed to keep records as accurately and systematically as possible. But we find that millions have been lost. When were they lost? And yet they have kept a clear record. Has the money met the function that it was intended for? These are the issues. Then the accounting system is all aggregative. Now, the less aggregative it is, the more efficient it is. And if it's more aggregative, then we spend more. And in Kenya, we are fond of having a more aggregative approach. So we end up spending more when we are not supposed to spend. These are actually the problems with this program and performance-based budgeting systems, which most governments, including Kenya, have adopted because they want to see the functions and the economic growth function met at the same time. So this is actually the last slide on public finance. I wish that we conclude that at that point. Then we look at something else if you allow. Any question that far? Please unmute them, they ask questions. Hands up for those who are ready to ask a question. Hands up for those who wish to ask questions. Yes. Mafi.
Yes, just a concern.
Can you unmute them so that they ask questions?
Just clarifying something.
You speak up. Mafi, you are not speaking. We can't get
the
you.
The notes are available in the e-learning.
The notes are?
I'm saying this.
Yes.
You said that the notes are available at the e-learning portal.
Yes.
It's unfortunate that when we enter, we usually found only notes under statistics.
Under? The whole course is there. I did not start with the first topic. I began with number 3. Just scroll through the course. You will see the notes on public finance. The whole course content.
They are not there.
Now, I'm telling you, I'm the course lecturer. I've taught this course for years. You are telling me they are not there. It's me who put them there. Come to the office on Monday. I'll show you. They are there.
I'm enabling. I'm opening them because I.
Ian Kundu. Ian. You know, when we tell you, then you argue. I'll ask the Odell to make it 2024, 2025 so that you can easily access all of them. But the notes are there in the LMS. Maybe you have not registered.
Watufungulia hatuoni.
Wewe ni kipofu, utaonaje? Unasema, I tell you. Kwa kipofu utaonaje?
Huyo ni kama amepigwa heartbreak huyo.
Mimi si kipofu lakini sijaona.
Utaona.
Yes.
Can you please mute unless I've asked you to talk? Please mute unless I've asked you to talk. Kiprimo. Kiprimo?
Yes, sir.
Talk, your hand is up.
I was asking, can performance and based budgeting system be implemented in developing countries?
Yes, in fact, that's what they are using. Countries like Kenya, that's what we are using. That's the model. Program and performance-based budgeting systems. And as we do that, that's why you see these problems. They are there: multiplicity, quantification, flexibility, and issues of analytical skills, issues of accounting system. We are using more of aggregative approach in the accounting system, which now calls for us to spend more than what we have anticipated. That is exactly what.
Okay, thanks, sir.
Joel?
Yes, morning, sir. I was asking about analytical skills, which depends on the people who prepare and execute the program.
Yes.
Why can't we have friends on the ground to
Why
confirm
can't?
this? Those people, we have people.
The issue is one.
Yes.
Joel.
But sir, I've not yet even completed my question.
Yes.
Yes, those who have it.
Unapotea. Unapotea, sikupati.
Okay, are you getting me, sir, now?
Yes.
Okay, I was asking this. Why can't the government release people to come on the ground and exercise?
You know, the identification of projects. Do you know why we talk about public participation? Only that public participation is starting from above. But this thing should start from below. The people on the ground who know what they want. But we have taken it that it's the executive to tell us what they want. Then they come and tell you so that you agree with them. That's where the problem is. Look at the people who are charged with doing the cost-benefit analysis, the analytical skills. Because we are only giving a job to every dictum and hurry. Where is the professionalism? The experts, where are they? I want to give you an example. Look at how the cabinet is appointed, how the PSS are appointed, principal secretaries. Do they really meet the criteria? Even at the national and at the county government, do they really meet? And those are the people you have charged with the responsibilities, the ones that should carry out this analytical. They should be professionals. And even if we put there the professionals themselves, are they competent? How many buildings are collapsing? These days is regular. What has become of the engineering profession? How many patients are dying in hospitals? Yet we expect the professionals, doctors, to be there. But we have now quacks who pretend to be in that name. And that's where the problem stems from. The skills are usually limited. They are not competent enough. They want to circumvent. Instead of mixing 3 barrels of sand to 1 bag of cement, they want to make 4 or 5 wheelbarrows. That makes the wheelbarrows weak. But this is done by the people. That is it. Gideon? Wilson?
Yes, sir. I was asking, is there a way that the balance of payment can
Is there a way?
economy, for example, economy?
Please, you add the volume so that I hear you.
I was asking, sir,
Yes.
is there a way that the balance of payment can affect the economy of Kenya?
Very much. What did we say a balance of payment is? This is international transactions. What are international transactions for a period of 1 year? That have we traded with other countries internationally? If the answer is yes, how much did we export and how much did we import? If we import more than what we export, then we have a deficit balance of payment. How do we meet that deficit? We must pay for it. So it must affect the economy because we must source for funds internally to pay for the excess, to pay for the deficit. If it is surplus, then that surplus will come back to us for development. That's how it affects. And even when you look at the gross national product, I explained that the gross national product is supposed to be more than the GDP because of the net factor income from international transaction, the balance of payment. But if we have a deficit in the balance of payment, it will eat into the GDP, and therefore GDP will be more than the GNP for any country, which is more societal. And that's how we cannot realize development, but we keep borrowing, and borrowing. Wilson? Wilson?
Sir, and can it cause inflation?
Can
it cause inflation?
When you talk about inflation, we shall look at it under index numbers. This is purely budgeting. We shall look at it under index numbers. That's what is just nothing but inflation. Then we will understand better. Na kuna mtu akanaongea sana kwa hii darasa, ni nani? Nitakufukuza.
Fukuza yeye.
Magdi, hii mtu inaongea kwa darasa yangu amezidi kuongeza kikisi mingi, ni nani?
Let me just check and remove.
Delete him from my class. Watu wa kusumbua darasa, delete them and they should never ever register them.
Brian.
Huyo Brian amekuwa notorious. Register him from my class. Watu wenye wasikizi, I don't want to joke around with them. Wenzako wanauliza maswali ya maana, wewe huko unaongea kikizi mingi. Mbavu kabisa. Now, members, we have concluded that. Should we start a new topic?
Yes, of course.
Or we wait for next week?
Yes.
Yes.
We start.
We start next.
Just
now.
I suggest that we give a brief introduction.
Class rep?
Next week.
Class rep, where are you? Class reps?
Next week. I'm here. Next week.
I have class reps talk to me.
Oh, bundles. Yes, we are here, sir.
I think let's do it next week.
Sema wewe ni nani? Because najua class reps.
Hello, sir.
Yes.
Fabian.
I'm just a Huggins.
Just as Huggins?
I'm a general class representative first year.
Yes.
And now that we are a little bit behind in syllabus coverage, I request that we at least introduce the next topic to around 10 a.m.
I like your choice of words because you know where we're supposed to be. I'm the course lecturer. Just as.
Yes, sir.
I'm the course lecturer. Who told you that we are behind?
Yes, tell him.
Who told you? You know, you should live within your jurisdiction. Mimi ndio course lecturer, sio wewe. Mimi ndio najua tuko nyuma ama tuko mbele, sio wewe. Not my prefect. Just as you are not my prefect. To me, we are okay. We proceed or we adjourn till next week?
Next week.
Msichana anaongea sana ni nani?
Next week.
Why are you harassing our prefect?
Okay, so
Valentine preparation.
Where are the class reps? I want to get the comment from the class reps.
Okay, sir. This what I was saying. This what I was saying. Hello.
Yes, we are listening.
Okay, so now that I can see most of our members are requesting that the class stop here. Let's adjourn till next week. Then.
Okay, sawa, Justus, point taken. Mwingine?
Mimi.
Hello, sir.
Yes.
I'm Mangoli Samuel.
Yes.
We are requesting maybe to start the next week for the new topic. Thank you.
Yeah, we have concluded public finance. I want us to start on taxation. A new topic.
If you can just page on, let us start.
Let's just introduce the topic next week.
Okay, you want us to proceed?
No. No.
Now, I want you to get me correctly. Pay attention, all of you.
Yes, sir.
I want us to cooperate. Mnanipata vizuri? Yes. Naona mnasumbua sana. Na mkisumbua sana niliwaambia. I remain to be the boss. And I will be the boss to give direction in this class.
Yes, sir.
Mwaje hii maneno yenu ya ujuaji mingi. Kelele. Uliza wenzenu kelele.
I'm feeling
back in my class. So we are John. Then we shall meet next week. I'll be in class from 7:30 next week.
Okay.
I gave you the rules. I gave you the rules for the lesson. If you forgot, go back and listen to the audio for the recordings for that day.
If you don't get it, forget about it.
Ninyi mnataka kujifanya hapa ndio mnajua. I'll just deal with you and dehone you pole pole.
Good weekend ahead.
Can you enjoy your Valentine tomorrow and pray safe?
Same to you.
Same to you.
Can you pray safe? Kule wengine ya tu semester 1 on the 14th of September. Tumbo zitakuwa kubwa kushinda sana. Fanya hapo ndio mnaongea sana. Thank you so much. We are John. Till next week, I'll be in class 7:30.
Thank you,
sir.
Thank you, sir.
I have enabled all the content on the e-learning. Members, I have enabled all the content on the e-learning. So log in, enroll, and access the notes.
Point taken, sir.
Enrollment key.
But we cannot be downloaded.
Enrollment key, I think I shared on the WhatsApp.
Excuse me, sir.
With the class.
It can't be downloaded.